Welcome to the Deep Dive, the place where we cut through the noise and get straight to the insights you need. Today, we're embarking on a very specific deep dive, tailored just for you, the American investor. We've gathered a stack of expert analyses on one of those powerful names in digital payments, Visa, ticker symbol V. Our mission today is to thoroughly unpack these detailed financial analyses, looking at everything from the granular company specifics to the sweeping global economic trends. We want to give you a comprehensive yet easily digestible overview of Visa as a potential investment. We'll be extracting the most important nuggets, the surprising facts, and the critical context to truly help you understand what matters most in this complex landscape.
Yeah, and what's truly fascinating here is that we're approaching this not just as a standard company profile, but really as a layered investigation. Think of it as peeling back an onion, right? We'll examine Visa from multiple crucial angles: its core business, its rock-solid financial health, the intensely competitive landscape it operates within, the broader economic forces constantly at play, and even its internal capabilities and leadership. Our goal is to connect all these seemingly disparate dots so you can see the full, interconnected picture.
Okay, let's unpack this then. Many of us probably use a Visa card almost every single day, often without a second thought. But from an investment perspective, it exists in this unique space that's neither purely tech nor a traditional bank. So how would you best describe what Visa is as an investment? Is it a bank, a tech company, something else entirely?
That's a great question, because its identity is absolutely key to understanding its strength. Visa, founded way back in 1958, is primarily a payment network operator. So they don't issue credit cards themselves, nor do they lend money directly. Instead, they provide the absolutely crucial infrastructure, the digital highways, if you will, for payment authorization, processing, and settlement. They connect billions of cards and millions of merchants across over 200 countries and territories. Essentially, they are the secure, efficient backbone that enables, well, virtually all electronic payments globally.
The backbone, right?
Exactly. And what truly makes Visa so compelling for investors are its core characteristics. First, there's the global network effect. This isn't just a strong advantage. It's a truly formidable barrier to entry. The larger their network becomes, the more valuable it is to every user and merchant, attracting even more to join. A competitor can't simply build a better app. They'd have to build a better billion-card global network, which is, incredibly difficult and costly to replicate. This creates a powerful and sustainable moat.
A huge moat, yeah.
Second, it's a technology-based business model. They profit from tiny transaction fees, leveraging advanced technology and robust security systems to handle massive volumes. Third, Visa is a direct beneficiary of the cashless society. As the world steadily shifts away from physical cash towards digital payments, Visa is perfectly positioned to capture that immense growth.
They're right in the middle of that shift.
Precisely. Fourth, it possesses defensive qualities. Unlike many businesses sensitive to consumer discretionary spending, Visa benefits from the essential nature of payments. Even in economic slowdowns, people still need to buy groceries and pay bills, making Visa a surprisingly resilient play, often seen as a flight-to-safety asset within the tech space.
Interesting point.
And finally, they boast a high operating margin. Their tech-driven model, with relatively low fixed costs once the infrastructure is built, results in an incredibly high operating profit margin, often exceeding 60%.
60%, wow.
Yeah, it reflects a truly robust and efficient business model.
So if I'm understanding correctly, Visa is this highly profitable and defensible tech backbone for global commerce, directly benefiting from this massive ongoing shift in how we pay. It's a seriously strong foundation. Now, with that foundation laid out, the next logical question for any investor is, how healthy is this financial engine truly running? Let's dive into the key numbers you should be watching as of, say, July 34th, 2025.
Right. When evaluating a company like Visa, you'd certainly start with standard financial metrics like net revenues, operating income, and net income. These consistently demonstrate stable profit generation, fueled by strong sales growth and those high margins we just highlighted. But crucially, for a payment network, you also need to focus on what truly drives those numbers: payment volume.
Okay.
That's the total amount of money transacted through the Visa network. This is their primary revenue driver. Then there's the sheer processed transactions, meaning the total number of individual transactions handled. Both of these show steady growth, directly driven by the increasing global adoption of digital payments.
Got it. Volume and number of transactions.
Exactly. And critically, don't overlook cash flow. Visa consistently boasts strong operating cash flow, which is vital for reinvestment in the business, funding those dividends, and executing share buybacks, all of which directly benefit shareholders like you.
It's easy to look at big numbers, but where it often gets really insightful for an investor is understanding how to interpret their recent earnings reports and what to look for in their future outlook. What should you specifically be paying attention to?
Absolutely. When an earnings report drops, you'll first want to see if their net revenues and EPS, earnings per share, met or preferably exceeded market expectations. Consistency here is a strong indicator of reliable management.
Or beating, yeah.
Then, dig into the growth rates of payment volume and processed transactions. Pay particular attention to the mix between credit and debit cards, and critically, how regional growth is shaping up. Is the U.S. performing strongly, or are international markets leading the charge? That mix matters.
Okay, the regional breakdown too.
And another key metric that offers deeper insight is international transaction volume growth. These cross-border transactions are typically very high margin for Visa. So their growth directly reflects the health of global travel and e-commerce, directly impacting profitability. A robust increase here is a very positive sign because these transactions are essentially, pure profit boosters.
Makes sense. More travel, more international online shopping, higher margins for Visa.
Exactly. And finally, always look at the company's own projections for future revenues and earnings. These are crucial for predicting future stock movement and understanding management's confidence in the business trajectory. It tells you what they believe is coming down the road.
Okay, guidance is key. So Visa clearly generates a tremendous amount of money, but to truly understand this layered picture, we need to peel back another layer. Where exactly does all that revenue actually come from?
Good question. Visa's revenue streams are quite diverse, reflecting the various ways they monetize their vast network. Firstly, there are service revenues. These are primarily transaction fees based on the total payment volume that flows through their network. This is their largest component.
Based on the dollar amount spent.
Correct. Secondly, data processing revenues come from fees for the essential services of transaction authorization, clearing, and settlement. These fees are typically based on the sheer number of transactions processed.
So per swipe, basically.
Per swipe or tap, yeah. Thirdly, and very importantly, are international transaction revenues. These are fees collected from cross-border transactions, meaning payments made in a different country or currency than where the card was issued. As we said, these are notably high margin for Visa and are influenced by factors like exchange rates and global travel and trade activity.
A high margin piece again.
Definitely. And lastly, other revenues encompass a range of services, including licensing fees, consulting services, and various value-added services.
Okay, so multiple streams.
Yes. And the major trends underpinning these revenues are the ongoing, steady increase in global payment volume and transaction counts, driven by that largely irreversible shift towards digital payments. As I mentioned, the importance of international transactions cannot be overstated due to their significantly higher margins, making global travel and e-commerce resurgence a substantial tailwind for their profitability.
Right.
Additionally, the expansion into these value-added services like advanced fraud prevention, data analytics, and tokenization is a significant strategic move for Visa.
Tokenization. Explain that quickly.
Sure. Think of tokenization as replacing your actual card number with a unique, randomly generated token for each online or mobile transaction. If a merchant's data is breached, only the useless token is stolen, not your sensitive card details. It makes digital payments significantly more secure for you, the consumer.
Ah, okay, so that has security and value.
Exactly. It helps Visa diversify their revenue streams beyond just core transaction fees and continuously improve their overall profitability and the security of their network.
Makes sense. But even a giant like Visa faces challenges. You've laid out their formidable position, but what are the potential risks an investor should be aware of?
Yeah.
And how does Visa stack up against its evolving competitive landscape?
That's an essential question because even the strongest companies have headwinds. First, regulatory risk and fee pressure. There's persistent global pressure to lower interchange fees. Now, these are small fees that the merchant's bank pays to the cardholder's bank every time a transaction occurs. Visa doesn't collect these directly, but they are intrinsically linked to the value of their network.
Okay.
And any pressure to reduce them can ripple through their entire ecosystem, potentially hitting their core revenue potential. Antitrust regulations and new rules for cross-border transactions in various countries are also a constant concern.
So regulatory hurdles are always there.
Always. Second, the intense competition. Besides traditional rivals like MasterCard and American Express, the landscape includes a growing array of nimble fintechs like PayPal, Block, which is the parent company of Square and Stripe, You also have big tech companies such as Apple Pay and Google Pay rapidly expanding their payment offerings.
They're all chipping away, potentially.
Potentially. And the long-term impact of central bank digital currencies, CBDCs, also introduces a new layer of uncertainty as central banks explore their own digital currencies, which could, in theory, bypass existing networks.
Right. CBDCs are a big unknown.
Third, macroeconomic volatility. Economic slowdowns or recessions directly affect consumer spending, impacting Visa's payment volume. Inflation, rising interest rates, global travel or trade disruptions like geopolitical risk or another pandemic also pose significant threats.
Tied to the economy, as you said.
Very much so. And finally, given its critical role, technical failures in cybersecurity are paramount. As a core global payment network, any system outages or major cyber breaches could severely damage trust, lead to immense liabilities, and badly impact their reputation.
You've highlighted some incredibly strong moats, but let's play devil's advocate for a moment. Are there any scenarios where a nimble fintech or a bold move from a big tech company could genuinely chip away at that unrivaled global network? Or is it truly unassailable?
That's a fair challenge. And while unassailable might be too strong a word in any industry, Visa maintains several exceptionally strong competitive advantages that make it incredibly difficult to displace. Firstly, its unrivaled global network. It has arguably the most extensive and deeply integrated payment network worldwide, connecting billions of cards and millions of merchants. This acts as a truly significant barrier to entry for new players because it's not just about building tech, it's about building trust and adoption on a global scale over decades.
That scale is hard to match.
Incredibly hard. Secondly, strong brand recognition and trust. Decades of reliability and widespread acceptance foster strong preference among consumers, merchants, and the banks that issue cards. When you see that Visa logo, you generally trust it'll work.
Yeah, it's ubiquitous.
Thirdly, advanced technology and security. Their infrastructure is built to handle billions of transactions securely and efficiently, with state-of-the-art fraud prevention and cybersecurity measures, which are continuously updated. That's crucial. Fourth, extensive partnerships. Visa has cultivated collaborations with countless banks, financial institutions, and increasingly, fintechs globally. This dramatically expands their reach and integration into new payment solutions.
They work with everyone.
Pretty much. And finally, regulatory adaptability. With decades of operating in diverse global markets, Visa has a long experience navigating and adapting to complex and ever-changing global regulations effectively. This institutional knowledge is a huge asset that many newer players simply lack. So, while competitors can innovate around the edges, replicating the core network's scale and trust is an enormous, perhaps insurmountable, hurdle.
That paints a really clear picture of how they defend their turf. Okay, beyond the company itself and its direct competitors, how do larger macroeconomic forces shape Visa's performance? And for those of us who like to look at the stock chart, what does a technical analysis of Visa typically show?
Right. Visa's business model is indeed very sensitive to global economic trends, especially consumer spending, because every transaction on its network is tied to real-world economic activity. Economic growth and consumer spending are foundational. A robust economy and confident consumers lead to higher payment volumes, which directly translates to more revenue for Visa.
More spending, more swipes.
Exactly. Conversely, economic slowdowns or recessions inevitably impact discretionary spending and can dampen Visa's growth. Then there's inflation and interest rates. While inflation can nominally increase payment volume because prices are higher, it can also lead to real spending contractions if purchasing power is eroded.
Right? People buy less stuff even if prices are up.
Correct. High interest rates, on the other hand, can reduce disposable income by increasing debt servicing costs, further dampening consumer spending. Employment and wages are also critical. Strong job markets and rising wages generally boost consumer purchasing power, which means more transactions flowing through the network.
Makes sense.
And the resurgence of global travel and trade is a huge positive. The return of international travel and cross-border trade directly benefits Visa's high-margin international transaction revenues. We keep coming back to that.
That international piece is key.
Definitely. Lastly, currency fluctuations matter. A stronger U.S. dollar, for example, can reduce the value of international revenues when converted back into dollars for reporting. Geopolitical risks also play a role, obviously, as disruptions can impact global trade and consumer confidence.
So it's very much tied to the pulse of the global economy.
Yeah.
Okay, and for those of us who track stock charts, what does a technical analysis of Visa typically reveal about its price action? What should we be looking for?
Based on past data, particularly up to, say, mid-2025, Visa typically demonstrates stable upward trends, often indicative of a solid long-term growth stock. If you were to look at the charts, you'd often observe clear support and resistance levels. These are price points where the stock tends to find buying interest acting as support or encounter selling pressure acting as resistance.
Floors and ceilings, basically.
Kind of, yeah. Looking at moving averages, longer-term ones like the 200-day moving average often act as strong support, with the stock generally maintaining an upward trend above them. You might also spot patterns like golden crosses, where shorter-term averages cross above longer-term ones, sometimes signaling bullish trends.
Okay.
Volume is also important. High trading volume accompanying price movements can confirm the strength of that move, up or down. Lastly, indicators like the Relative Strength Index, RSI, and Moving Average Convergence Divergence, MCD, can be useful. The RSI, for example, helps gauge if a stock might be overbought or oversold in the short term. The MACD helps identify potential trend changes.
So tools to gauge momentum and potential turning points.
Exactly. However, it's absolutely crucial to remember that technical analysis relies on historical data and patterns. Fundamental changes like unexpected earnings surprises, significant regulatory news, or major shifts in the economic landscape can quickly override any technical signal. For long-term investors like yourself, the company's underlying fundamentals really remain paramount.
That's a really good reminder to keep the big picture in mind. Okay, finally, let's look inside at the engine room, so to speak. What internal capabilities ensure Visa's continued dominance and provide value back to you, the shareholder?
Yeah, Visa's sustained success truly hinges on several key internal strengths that are constantly working behind the scenes. Firstly, leadership and vision. The foresight of management, individuals like Alfred F. Kelly Jr., the chairman, and Ryan McInerney, the CEO, in navigating this constantly evolving digital payment landscape is crucial. Their ability to expand into new areas like B2B payments and emerging markets, and to adapt swiftly to regulatory and competitive threats, that's a cornerstone of their ongoing strategy.
Strong leadership is key.
Absolutely. Secondly, technology and innovation. They possess robust infrastructure for stable, scalable transaction processing, top-tier cybersecurity capabilities, and a deep ongoing commitment to integrating new technologies. This includes exploring things like blockchain, artificial intelligence, and, as we mentioned, tokenization. A strong developer ecosystem fostered through their APIs also encourages external innovation that benefits the entire network.
So they're not staying still technologically.
Definitely not. Thirdly, talent. Attracting and retaining top talent across critical areas like finance, technology, security, and data science is vital for continuous innovation and operational excellence. It's a highly skilled operation.
Need the right people.
You do. Fourth, financial health. Visa consistently maintains strong operating cash flow, practices efficient capital allocation for investments, dividends, and share buybacks, and typically carries a low debt ratio. This provides both resilience and significant financial flexibility to invest for the future or weather downturns.
Financial stability check.
And finally, partner network management. Maintaining strong, collaborative relationships with thousands of banks, financial institutions, and increasingly fintechs is absolutely key to their network expansion and the effective delivery of new services. Those relationships are gold.
And all those internal strengths ultimately translate into direct value for you, the shareholder, right? How does that look?
Absolutely. Visa has a well-documented history of consistently increasing its dividends year after year. That's a big plus for income-focused investors. And they engage in active share buyback programs. Buying back shares reduces the number outstanding, which tends to boost earnings per share and support the stock price. This combined approach demonstrates their clear commitment to returning value to shareholders, making it an attractive proposition for investors seeking both growth and a reliable income stream.
Growth and income potential. Okay. So what does this all mean when you put it all together? What's the takeaway here? Our deep dive into Visa shows a company with powerful market dominance and really robust financials, uniquely positioned to benefit significantly from the accelerating global shift to digital payments and the rise of e-commerce. Their strong network effect, high profitability, and commitment to continuous innovation are clear, compelling positives for investors like you.
Yet, as we discussed, you must remain vigilant regarding potential risks. These include regulatory pressures on those interchange fees, intensified competition from agile fintechs and powerful big tech companies, and of course the broader impact of macroeconomic fluctuations on consumer spending. The company's ability to adapt and innovate in these specific areas will be absolutely key to its continued success in the years ahead.
So as you consider Visa as an investment, maybe ask yourself, how effectively will Visa leverage its vast network and innovation to navigate the future of digital currencies, like CBDCs, and the increasing complexity of global regulations? That's definitely a fascinating question for the years to come. If this deep dive was helpful, please consider subscribing. We'll be back soon with another deep dive into a topic that matters to you. Thanks for joining us.